Welcome to this Killik Explains finance video. This week, an idea that's doing the rounds in the property industry, but I think is a bad idea, the 100% mortgage. Why do I think it's a bad idea? And a little bit of an introduction in terms of what these things actually are, as a reminder for newcomers. So, bit of background. Amongst others, the Building Societies Association have said we haven't seen 100% mortgages for years since the financial crisis, so it's time they made a comeback. The aim is to help a select pool of first-time buyers. So in fairness, the aim is valid enough. Let's get more people onto the property ladder who are frustrated buyers, and let's do it with a 100% mortgage. Let's lend them the entire value of the property they want to buy. Now, they are only saying it's select buyers, so these might be people who are on a career path with rising earnings, and or people may be expecting an inheritance. That apparently is a good target audience for the 100% mortgage. But I'm not sure this is the right way to go about helping any buyers, including this pool. Now, a quick recap. For those people thinking mortgages, how do these work? Very quick recap, more detail in other videos. Basically, it's a loan secured on a property. So this is borrowing, it's got a fancy name, a mortgage, borrowing money, and the deal is if you fail to repay either the interest and or the capital borrowed on a certain style of repayment mortgage, your property is at risk. So the interest rate is likely to be relatively low because the security for the lender is high, and that's a general rule of thumb when you're borrowing. And the deal is the lender can seize the property and try and sell it in the event that you fail to keep up repayments, hence the warning that's always given on mortgages. Now, 100% mortgages. So this is where you borrow the entire value of a property rather than a proportion of it. All right, so the loan to value ratio is 100, if you like, put it in that jargon. Key risks. Number one, the political and economic backdrop is not supportive. So whether it's Trump's tariff war with China, whether it's Brexit, whether it be Italy wondering whether and what relationship it wants with the European Union, whether you're looking at general global conditions, the backdrop's not supportive. And the property market is creaking right now. Interest rates are rising, so the Federal Reserve is leading the way in America in raising interest rates. Should you be borrowing the entire value of a property in that climate? Number three, there is a risk of instant negative equity. So the very fact that property prices are soft at best in certain parts of the country, including London, means you could be thrown into negative equity. You might think, so what? But actually, that matters. So what is this beast, negative equity? And I'm arguing that nobody should run a significant risk of going there, even if they are relatively well-off, first-time buyers, potentially. So it's the idea that your mortgage debt exceeds the value of the property on it. Now, how could that happen? So a 100% mortgage would be like this on the left-hand side here. Property is valued at £500,000. You are borrowing £500,000. That's 100% LTV, loan to value as it's known. Now, that's not negative equity. All right, don't forget you've got to afford stamp duty, other costs and so on top. That is basically exactly matching the value of the property. But let's imagine the property market starts to slide. So the property slips to £400,000. You've still got to pay off a loan, let's say the capital value of the loan, £500,000. Now you've got negative equity of the difference of £100,000. In other words, the value of the loan exceeds the value of the property that it's secured on. Negative equity. Now, that you might think, well, that's only a problem for the lender. No, it could also be a problem for you. How? Why this matters? Well, essentially, it may limit your ability to sell the property, for starters, all right? Secondly, so that's not all, it may limit your ability to remortgage with another lender. You may not be accepted at all by another lender if you're in a negative equity situation. And it may even limit your borrowing options with your existing lender. So your existing lender, who was happy to lend you the full value of the property 5 minutes ago, turns around and says, well, if you want to remortgage, let's say, we'll put you on our standard variable rate because you're in negative equity, and that will be fairly horrid. So, 3 reasons why negative equity is not something to just dismiss. Now, in summary, therefore, yes, property affordability is a challenge. I look like a bit like a sort of a Christmas Grinch, if you like, saying, well, you know, don't do it, don't have 100% mortgages, because I know lots of people are struggling to get on the ladder, but demand-led measures are not the solution, or at least they're only part of the solution. And this is a demand-led measure. This is trying to push people into taking lots of debt on to get on the ladder, when I think that supply-side changes are needed. Now, that's an economist's fancy way of saying we need more affordable property in the right places, not necessarily measures that will put first-time buyers into piles of debt, and even worse, negative equity. So, you're a frustrated buyer thinking, what do I do with that then, Tim? Well, I would suggest, first of all, rent rather than buy for now. If you're someone who's thinking I need 100% mortgage to buy this property, then perhaps you need to save more of a deposit, and maybe it's time to have a wider conversation with family members further up the family tree who may, only saying may, be prepared to help you fund that deposit. Because with a deposit, you lower the risk of negative equity and lower the risk of some of those problems I talked about further down the line. So there you have it. Questions, editor@killik.com. And if you want to see some other videos around buying property, should you buy a property, when should you buy a property, is buy to let a good idea, all that kind of good stuff, then it's killik.com/learn.